The Federal Reserve should stop targeting interest rates. Let the market set them. We'll all be better off. Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. One of the perverse realities these days is how just about everyone thinks it's fitting and proper for the Federal Reserve and other central banks to try to control interest rates. We'd be much better off if they ceased doing so. Interest is the price you pay for borrowing money, no different in essence than the rent you pay for borrowing an apartment or house. Almost all economists acknowledge rent controls distort the market and lead to shortages of affordable housing, which then lead governments to push for subsidized housing, which in cities like New York lead to ugly scandals over lack of maintenance. What the Fed and similar institutions routinely do with the price of money is a form of rent control. Until recent times, the Fed was content to target short-term rates. But since the crisis of 2008-2009, it and other big league central banks have attempted to manipulate longer rates as well. They haven't stated this explicitly, but that is what they want to do. Hence, we have the spectacle these days of literally trillions of bonds denominated in dollars, euros, and yen with negative rates of interest. This is utterly abnormal, and it leads to distortions. Look at the gargantuan amounts of corporate bonds being floated here in the U.S., especially for companies whose prospects are anything but promising. The result will be massive wastes of capital and investor losses, just like the housing bubble of the early and mid-2000s. Central bankers have long believed they can guide economies as if they are machines. They think inflation is the result of too much prosperity, excess demand in their argot, and recessions the product of too little inflation. This is why you repeatedly hear the Fed and its banking brethren say their goal is 2% inflation, enough in their way of thinking to keep the economy revved up without overheating it. Manipulating interest rates is one of the key tools in this exercise. To imagine a central power like the Fed can direct the activities of 330 million people in the U.S. would be head-shakingly laughable if the consequences weren't so serious. The goals of the Fed, in addition to providing banking services for the federal government and particular services for regular banks, mainly a storage place for their reserves, should be to preserve the dollar's integrity and deal decisively with crises such as the 2008 financial panic and the recent pandemic shutdowns. And that's it, because that's all the Federal Reserve can constructively do. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions. Look forward to being with you soon again.